Every morning, I turn on my computer, but the first thing I do is not opening the daily chart. I don't look for candlestick patterns, I don't draw trend lines, I don't turn on indicators. All of that can wait. What I need first is not the shape of price, but the market's breathing for the day. I observe like someone standing on a hill, looking down at a battlefield still covered in dust. I open TradingView. The first thing I type is US 10Y, the 10-year US Treasury yield. Then DXY, the strength of the dollar. Then XAU USD, gold. And finally, SPX, the S&P 500. I don't use indicators, I just watch price. I watch who's in control. I watch how fast price recovers after each drop. I watch whether money is moving toward risk or retreating to safety. If yields rise, the dollar weakens, gold pushes up, and equities recover, I know the market is betting on a story. And when the picture flips, I know many people are about to run. After that, I open Trading Economics. I don't read opinions. I don't care about commentary. I glance at a few core numbers: policy rates, PMI, CPI, GDP, and the meeting schedules of the Fed, ECB, and BOJ. I ask myself one question only: what is the crowd expecting to happen? And if the opposite shows up, how many people will be trapped inside their own belief? Next, I open Forex Factory. I check what major news is coming, what time it's released, and most importantly, how the market is waiting for it. If the Asian and European sessions go sideways, I don't call it a boring market. I call it a market holding its breath. And I never enter a trade while the market is holding its breath. Finally, I look at relative strength across currencies. If I'm watching Euro USD, I also look at GBP USD, AUD USD, USD JPY, USD CHF, and the DXY. I don't need everything moving in the same direction. I only need to see where the dollar is weak and where the balance is starting to tilt. I don't look for entries in candles, I look for them in psychology. Who is panicking? Who's pretending to stay calm? Who is standing in strong winds, still believing they're stable? I don't measure trends, I measure blindness. And when I see the market believing in something it shouldn't believe in, I know an opportunity is forming. A winning trade doesn't come from a pattern, it comes from preparation. And preparation always starts with understanding what the market believes, and deeper than that, what it's afraid of. I don't rush, I observe, I wait. I only place my hand on the mouse when I can feel the market starting to tremble. I'm not good at predicting, and I don't believe anyone can guess the market's direction every day. But I'm good at something else, recognizing when the market is believing the wrong thing. I don't wait for price to run, I wait for belief to begin cracking. The market doesn't react to news, it reacts to expectations about that news. If CPI comes out positive and the dollar spikes, I don't rush in, I sit and watch. If 10 minutes pass and price doesn't continue or starts to slow down, even turns back, I know something inside is out of sync. Because if the news is good and price doesn't rise, it's very likely buyers already bought before the release. And if they bought early yet still can't push price further, I know the real buying power is already exhausted. Another time, European GDP was released very weak. Euro USD dipped slightly for a few minutes, then reversed almost 100 pips. I wasn't surprised, because people who understand the market don't look at the news, they look at the reaction after the news. I call that moment a flaw in expectations. When the market believes A will happen, but price reacts in direction B, that's when I move into readiness. Not to enter immediately, but to observe, like a sniper waiting for the target to expose itself. I don't fight the crowd, and I don't follow them either.
I simply watch when they start believing something too strongly and when that belief begins to crack. I don't need to know whether the news is good or bad. I only need to know who believed, who entered early, and who is now trapped inside their own expectations. I don't need volume, I don't need footprint. I watch candles, reactions, and time. If price surges hard, then stalls too early, if there's a sharp push that fades away as if it never existed, I know someone has just been betrayed. And in the market, the betrayed ones are usually the first to run. But I still don't enter. I wait for one more step. I call that step the probe trade. But before I talk about that, remember this. The market doesn't move because of truth. It moves because of belief and because of the reaction when that belief collapses. If you're still here, I'll tell you next how I place my very first trade as light as a knock on the door. Not to win, but to listen to how the market answers. I never jump into the market with full force. Never. I don't gamble, I don't seize opportunities. I simply knock very gently on the door. When I've seen the market react the wrong way, when the crowd starts to tremble, when the opposing side is scrambling for an exit, I place a very small position, sometimes just 1/10 of my usual size, sometimes even smaller, just enough to feel the response. I don't expect that trade to win.
I don't need that trade to make money. I only want to know this. If I push lightly, how will the market respond? If price snaps back immediately, I exit without hesitation. I understand. The door is still locked. If price doesn't react, just stay still, I wait a little longer. But if price begins to move in my direction, slowly, steadily, without panic, I know someone has just opened the door for me. While holding the probe trade, I don't turn on the TV. I don't go online. I don't read the news. I only watch the chart, like watching a chessboard entering the middle game. No rush, no imagination. I observe 3 things. First, can the market absorb my probe trade? Does price fight back aggressively, or does it accept my presence? Second, is the opposing side counterattacking? Is anyone starting to hold and hope? Are their price levels being tested repeatedly, yet failing to bounce? Third, is price gathering strength to continue or merely dragging out a slow collapse? If all 3 give me the same answer, I don't need any further confirmation. That's when I prepare to strike for real. A skilled fighter doesn't unleash full force at the start. He waits until the opponent exposes a weakness and knows this is the only moment. I don't rush. I don't get greedy. I listen. And if the market whispers to me, it's ready, I pick up the sword. I don't add because I'm in profit. I don't attack because adrenaline rises. I strike only when the market has given me enough signals, not technical signals, but signals of fear spreading across the other side. I look at candles not to find entries, but to find signs of surrender. A level breaks with no real pullback, a sharp push with no resistance, a crowd holding positions but no longer believing enough to stay. I know the battle has tilted. I increase my position, not to overeat, but because I understand this. Clear opportunities like this don't appear often. The first trade is to ask. The second is to confirm. And by the third, I deploy real force. There's no cheering in my head, no calculation of how many pips I'll make, only a very calm feeling, very cold, like someone who has walked past enough life and death moments and knows that now one clean strike is enough. I enter with 3 times the size.
The stop loss stays exactly where it was. I don't tighten it. I don't suffocate the position. I give the market room to breathe, but I don't give it a way back. At that point, I'm no longer reacting to the market. I'm the one striking. And every candle moving in my favor doesn't make me happy. It simply tells me I'm acting at the right moment. There is nothing more dangerous than a blade drawn when the opponent has already lost faith, because once they no longer believe in their own position, even a light touch will make them run before you need to strike again. I'm not greedy, but I don't forgive either, because the market never gives us two identical chances. Once I see the other side lose balance, I don't wait for them to stand back up. I finish it. And you know what? I've waited months for moments like this. But when they arrive, they usually last only a few hours. That was enough to give back everything I had patiently endured. If you've ever asked yourself when to go big, when to commit fully, this is the answer. When the market confirms it for you through the fear of those standing on the wrong side. But the story doesn't end there, because after every strike, the most important thing is not holding the winning trade, but knowing when to cut. One wrong cut can kill an entire strategy, no matter how perfect your entry looked. I don't hold and hope. I don't wait for just a little pullback. I don't tell myself the market hasn't hit my stop loss yet, so maybe I'll give it a few more minutes. I don't play with risk, because risk has never played with me. I've let a very small loss turn into a deep tear in my account, not because the market was too strong, but because I didn't have the courage to admit I was wrong. I thought I was being calm. In reality, I was wearing a mask called hope. And the moment you start holding a losing trade, you're no longer trading with reason, you're praying. You're handing your fate to something you do not control. That's when I changed. I cut losses fast, clean, without mercy. Even when it's a trade I prepared for all week. Even when the entry sits in the best zone of the month. Even when everything looks right. The market is not wrong. Only my expectations were. And the longer I hesitate while holding the wrong expectation, the harder the counterstrike hits. I don't cut because I'm afraid. I cut because I understand. To earn the right to win big, I must have the discipline to lose small. I don't wait for price to hit the stop loss. I watch speed. I watch reaction. If the market moves against me with clear force, without hesitation, I close the trade manually, immediately. I never allow a losing trade to hurt me twice. The first time, the market hits me. The second time would be me stabbing myself. And that I don't allow anymore. Once, I cut a trade for a loss of just 10 pips. 3 hours later, that pair collapsed nearly 200 pips. I didn't feel happy for getting out in time. I only knew I had protected my principles. And sometimes, protecting your principles matters more than protecting your money. No one leaves the market because of one small stop loss, but countless people disappear because of one trade they refuse to cut. Don't ask how to never lose. Ask how to stay in the game. Because if you're still here, with your mind intact, your discipline intact, and your trust in how you observe and respond intact, then sooner or later, the market will be forced to pay you back what you deserve.
I keep telling the story because after surviving, after not holding, not breaking, the final lesson I learned was how to fully exploit those rare moments when the market truly opens the door for me. There isn't always a battle, and not every battle is worth delivering the final blow. I survived, not because I'm smarter than anyone else, but because I understood that winning or losing isn't about the number of pips, it's about knowing when to stop. I don't wait for the market to apologize. I don't blame price for betraying me. When I realize it's not my moment, I step aside quietly. There are days I sit in front of the screen for 8 hours just to end with a single click. Close. No trade. No victory. Just a day that passed. I didn't die. And in this market, days when you don't die are the most valuable capital you can accumulate. I used to see cutting losses as failure. Now I see it as a form of intelligence. The intelligence of someone who understands some battles must be won and some battles must be skipped. Only those who are still alive have the right to choose the next fight. Those who fall because they tried to be right at the wrong time have nothing left to fix. I don't journal my winning trades. I journal the moments I stopped at the right time. To remind myself, I'm still here not because I'm great, but because I know when to stop. And only when I've preserved my calm after a difficult stretch of trades, when I'm no longer holding, regretting, or chasing, do I know I'm ready for the final step. Scaling in, as a decisive push when the market has truly collapsed. I talk about adding positions not because of greed, but because of clarity. A clean battle, fought only halfway, wastes months of waiting. I don't add because I'm excited. I don't increase size out of greed. I deliver the final strike only when the opponent has lost direction and the market has clearly tilted in my favor. I used to think scaling in was reckless, a kind of all-in meant for those ruled by adrenaline. But then I understood this. If I'm right and I just stand there and watch the market move, I'm betraying the very observation that kept me alive. I never add if the first position isn't clearly profitable. I never add if the market is still hesitating. I strike the final blow only when 3 conditions are met. First, price breaks a key level with no meaningful pullback. Second, the reaction from the opposite side has weakened to the point of near despair. And third, the market structure shows no one left with the courage to fight back. I don't scale in aggressively, just enough to add force to the final leg while others are panicking to get out. I don't need the market to go very far. I only need it to go far enough to end my battle with a clean, decisive cut. Real opportunities don't come every day, but if they come and you don't dare to act, then a whole year of observation becomes nothing more than a pointless walk. Once, I scaled in 3 times during a Euro-USD collapse, not out of excitement, but because I saw the buyers had fully withdrawn. No dirty flow left, no defensive signs, nothing to protect. I only needed to finish. After the final scale in, I don't add anymore. I don't tighten the stop aggressively. I let the market say the last word. If it continues, I stay with it. If it stops, I step away. No greed, no regret. A good fighter is not the one who strikes the hardest, but the one who knows when to end the fight. I don't scale in to make more money. I scale in because I understand precision doesn't come often. And when it does, I must be decisive. Otherwise, I don't deserve it. If you ask how often big opportunities come, I don't know. Sometimes weeks, sometimes months, sometimes the very next trade. But I know this, if it comes and you don't dare to act, you'll wait a long time to feel that clarity again. I don't talk about money anymore. I don't talk about pip counts. Because after entering right and exiting at the right time, the numbers fade. What stays is the feeling that I didn't hesitate, I finished the job, and I stopped when I should. On a Monday morning, I sit by the window with a cup of coffee. No news, no expectations, nothing special. Just a normal hour, a familiar pair, Euro-USD, a clean chart, no lines, no indicators. But I see one thing clearly. Price is compressing. Not exactly accumulation, not a breakout setup either, just a strange kind of waiting, so clear it doesn't need a name. The H1 candles rest quietly around an old low. Volume keeps fading. Each sell push is weak, as if the market is breathing with only half a lung. I don't look for an entry. I don't measure pullbacks. I don't calculate probabilities. I place a very small order. No big expectations, no expectation to win. Only because I can feel the market trying to lift its head after being pressed down for hours. 10 minutes later, price moves up. Not fast, just steady. No resistance. I sit still. No smile, no tension. I simply breathe in the same rhythm as price. Almost 2 hours later, price reaches an old resistance zone. I exit. No hesitation, no regret. I don't look at the account. I only realize I just traded without a single second of stress. Not because I won, but because for the first time, I didn't have to fight to take a trade. I call that the first trade where I didn't try to control the market, but moved with it. No resistance, no holding, no forcing, just alignment. And when things align, a trade stops being an exchange and becomes a natural movement. Some trades you win because you're skilled, some trades you win because you're lucky, but some trades you win because you're no longer the one attacking. I sit a while longer. I don't take another trade. I don't need confirmation. I quietly feel grateful for being allowed to feel that state. And at this point, I believe you understand the entire journey I've shared. Not just a strategy, not just entries and exits, but a process, one that took me from fighting the market to knowing when to step aside, when to stay silent, when to nod and move. If you're still here, I'll close this journey with the final lesson I only learned after many wins and losses, knowing what enough really means. If you're hearing these final words, I know you're no longer here to find a way to win fast. You stayed because part of you has already realized trading is not a hunt, but a process of understanding yourself. I no longer see the market as a place to take money from. I see it as a mirror. Every trade reflects clearly. Am I rushed or calm? Am I trying to make money or trying to prove something? Am I trusting my process or just using trades to fill uncertainty? There was a period when I won consistently but felt uneasy because I knew I was trying to run ahead of the market instead of walking with it. There are days I don't trade at all. I just write in my journal. I watch price without touching it, and I feel myself move forward, not on the chart, but in my mind. Now, I don't measure success in pips. I measure it with 2 questions. Did I enter in clarity? Did I exit by choice? If both answers are yes, then whether the trade wins or loses, it was a complete trade. You've heard me talk about reading flow, probing entries, attacking, cutting losses, scaling, waiting, and finally, sinking. But in the end, there's only one thing I want you to remember. The market is a place where no one wins forever. But if you're calm enough, honest enough with your emotions, and disciplined enough to know when to stand still, you're already ahead of 90% of everyone else. Don't try to take money from the market. Try to stay long enough. Because when you stay, victory will come on its own. Not because you're exceptional, but because you no longer need to win to feel worthy. Thank you for listening to this story, not through theory, but through trades, through scars, through long days in front of the screen without saying a word. If this video is worth saving, save it, not to learn trading, but to remind yourself on the days it's easiest to forget, calm is always the strongest weapon. We'll meet again, deeper, quieter, and very likely at the point where you begin to hear the breath of the market from inside yourself.